Hello Vikas, this is the first video for you, Wednesday, February 26, 2014, and let's start from the euro. I want to show you here on the euro where we are at the moment, and the bounce we had in the market is due to this trace. This is not a valid trace, but still there was some sort of participation here, and we can actually see it from the chart. So this is important. We saw a first measure move here, and this is from lows to highs, and as we can see here there was participation at this 135.80, and price went into the first target 137.30. Now with the move of today, price went right into that the next measure move here, as we can see, and price stopped right there. So technically there would be a trade on the upside here. However, due to my analysis on the wider time frame, I would not trust this. So as you can see here, you would buy it here at 136.67 with a stop at 136.48, but only if the weekly chart would agree with that. So I would not take this trade because the weekly chart does not agree with that. Now this trade could still work and bring price into 138.21, but it's not a high availability trade. So I don't recommend this trade. Now what I anticipate is market continuing lower, and the next level of support here is going to be the highs to lows to highs here, 136.24. For the same reason, I'm not going to trade this market. So I want to trade this market on the downside, not on the upside. I'm not going to trade this market against the weekly time frame. So this is what we see at the moment in this market. However, price can still bounce from these levels. If it bounces, the bounce is actually a short opportunity. If it does not bounce, we will see this price moving in extensions lower. So the point is that if it does not bounce, there is not a low risk way of taking the trade here. So let's review the 240 minutes here and see what we can infer from this chart here. So I'm going to make it bigger, and so as we said, we have this lows to highs here, and apparently this is showing support. It's not a support that I would trust. On the other side of the trade, we have on the 4 minutes chart, we had this level trading. The high was 136.94, the high is 97, so 4 pips. And now there are two outcomes. This could well be the trade that is going to work, in which case there are two actions here that could be done. If tomorrow at European Open, which is 3 a.m. US market, and I think it's 4 a.m. It's 2 a.m. Toronto time, then and the price is still below this 136.97. This could be the trade to take with a stop above 137.07 or 7 or 6 or 7. And the first target is, I will remove this support here, is at 136.44, and second target 136.17. So the calculation here is, depending on when this trade is taken, if it's taken at this price, it's going to be 20 pips of risk with an opportunity for 80 pips of gain here, which is a 4 reward to risk trade at current prices. On this time frame, there is another trade, but this trade might never, we might never see this level, and this is the actual all the way halfway back into 137.15. This is a high probability trade, but I would want to see confirmation here on the 15 minutes. So this is what we have here. The trade to keep in mind. Now let's look at the 15 minutes. On the 15 minutes, if we consider the move higher here, and let's consider all the levels that we saw. So if we consider the all the way halfway back, very high probability trade is this one. We might not never get there, and the current sequence in the is in this time frame. The sequence, the counter trend higher we see at the moment is, as you can see, 136.74 trading, bringing price into first target 136.93. So the next trace in the sequence is this one, and as you can see, price is currently respecting that setup. So if it continues higher, we should see price getting into 136.99. If 136.82 fails, then the next level of support on this time frame is going to be the 136.78. So one way to look at this would be, if we fail 136.82, we have to see whether markets holds 136.77. Okay, so at the moment the trade we are looking at is this trade here, but this is the level, this is an extension, this is the extension I showed you on the 4-hour chart. So this has traded already, so if the market goes back to this and holds this during the European open, then the trade is 136.97 with a stop with about above 136.07, as I showed you before in the previous chart, and that's the trade that it's here in the moment. Of course, above 136.07, then we are going to look at the all the way halfway back, and this is a high probability trade here. And again, we can use the sequence that I showed you if this continue higher into this level, and when that sequence fails, then that's the time, that's on the breakout we can take the trade with a stop above this level here. So this is okay. So gold is the next level, the next chart I want to look at, and we had a very important development in this market, and the development is represented by the fact that on the daily time frame we had an important violation, which is a confirmation of long at the moment, and the violation is the violation of this level here. As we can see, the 61.8 1337 was violated, and we started this move lower. So this move lower has the potential of bringing price into this 1263. So it's a large retracement. How can we get into this trade? This is a little bit more challenging, and Of course, we can always try to get into this trade after a bounce. We can get a bounce at 1311 here, but taking this short here before we get to this level of support might be maybe only for a short trade into 1311, and then we have to see what happens there. So we have a potential move into 1263, but we don't have a clear entry still for this market. So not on the daily at least. Let's review the 4-hour time frame here. On the 4-hour time frame, we have an indication of potential moving and extensions at the moment. The price could just continue lower, and we are seeing participation at this level here. Now, this level is gone, and there is still the possibility that tomorrow we get into it, 1330, with a stop above 1333, 34. That would be one trade. If we get higher into the all the way halfway back on this time frame, this is a very good and very high availability trade, and the entry would be 133, 1333 with a stop about 1337. And let's review the 15-minute here to see the sequence we have at the moment. So this is the chart, and we have a sequence which can be traced from an anchor that's very clear at the moment, which is this level here, which was the low of the first measure move. With the first measure move here, we could not anticipate this. We didn't know where the price started this move lower, but after we identify this, after the fact, we can see that the price started moving in extension, so we can use then the lows to lows, and they worked quite well. As we can see here, price was within this area, 1334, never went above 1356, and again, same anchor, it's what it's trading now. And this is the sequence that you have to keep in mind. As you can see, this level 1331 has traded already. If price gets there, and the sequence on the counter trend sequence is still holding here, to make the case that this has failed already. So this was the trade, but you could only take this if you were trading at this time frame. So on this market we have to wait, but there is a sequence there, and there is a support at 1312 as price gets there. So nothing to do there. Euro versus Japanese yen. I want to show you here that there was an high to low, and we started seeing participation on the downside. Now on the as you can see here, 140.97, and oh no, wait a moment. So we'll record and share another video for the other markets that I want to show to you. This video might be a little bit longer than normal, but there are some fundamentals that it's important to understand, otherwise it's very difficult to trade the method. So I will close this now.